Good morning, traders. Morning, people. It's Pete here. This is Mitigation. Welcome back. I haven't been sharing any content for a long time, but now I'm here to give you listen at the most powerful YouTube title. I will give you the only video you need to become profitable on trading. I took this time to perfect the strategy that I have shared with you a long time ago, maybe 1 year ago. If you look at my Discord group, if you look at my YouTube channel, you see everything. And in my Discord group, you have for free this Notion template that show you all the checklist, all the trading plan. Okay. It's very detailed. You have everything here. Okay, but anyway, I'm making this video to show you the powerful of this strategy. Okay, and if you want to see all my trades, just join my Discord group. You have free trading course, professional volume course. You have the bias every day, basically all my trades, the journal, everything. Okay, everything for free. I don't need your money. Okay, so what about this strategy? Listen carefully into this video, because it will, if you are not profitable, if you follow these rules that I will give you right by now, if you stick to the plan, obviously after a strong backtesting, because you have to train your eyes, you have to understand the logic that it's behind the strategy, which is, it's not easy, to be honest. It's not difficult, to be honest, but you have to backtest it. If you do it, you will be profitable. Okay, you will get founded, you will pass all the pro-firm challenges. Okay, so listen carefully. First of all, no matter the time frame, market is fractal. Okay, so no matter if you are a multi-day trader, if you have 2 hours per day, or if you are a scalper. I use this strategy for scalping, because scalping is the trading style that I like the most, that that suits to my style, my life. Okay, my everyday life. But you know, if you use it intraday trading, just get the bias on the 4 hour, get the structure of 15 minutes and the trigger on 1 minute, for example. Okay, if you are a scalper, 1 minute for structure, bias on 15 minutes time frame, and trigger on the 15 seconds. Okay, no matter the time frame. So first of all, just a quick recap. I will be showing you just a few theory concept. I don't like theory, but it's very important, because you will realize that all the stuff that YouTube and the traders, the professional traders want to give you, all the courses that you can do. I mean, there are a lot of concepts out there. Okay, but all the strategy have one thing in common. That is structure, the narrative. Once you understand the narrative, you have done the 50% of the job. Okay, this is very important. So I will give you some theory concept, but you know, just to understand, because it's important to understand the logic behind the strategy. Okay, and you will realize that everything tells the same story, and the same story is structure. Okay, so this is how market usually goes. Okay, what's important to understand is that every day the market is looking for a balance. Okay, market wants to be balanced. So this is what we call a range zone. This is a zone in which price, the market is balanced, in which buyers and seller agree, okay, for a moment on the same price, which is this one, okay, the POC, the point of control of this range, of the zone. Then we have imbalance. That's the reason why a fair value gap, we call it imbalance, because price is not balanced, okay, and is looking for another zone to get it balanced, which is this one, okay. So buyers and sellers agree of this price, so this price is good for both. Then we have manipulation, we go down, imbalance, market is not balanced here. Sorry for the drawings, but I think you understand, okay. And then we find a new balanced zone here, okay. So everyday market is doing the same thing, and this is basically is ocean market theory. Ocean market theory, okay. This is very important, because once you identify the zone, what you have to understand that price, once price unbalance the zone, so once price get from a zone to another, it always try to confirm that the zone which is not balanced anymore is confirmed. So the reason that it's behind a retest is that price wants to confirm that the zone that we unbalanced before is confirmed, okay. So we are not to get back inside the zones, inside the previous zone. I don't know if it's clear, but basically once we go outside the zone, price tends to retest the zone to confirm and go away, to confirm that this price is not valid anymore for the market, okay, because we have, like here, we have more buyer pressure that wants for the market, that wants the price to be balanced inside another zone, which is this one, or better, this one, okay. So we want to go there, we have to imbalance this zone, retest it, and go higher, okay. Then this zone is good, manipulation, we go up. Then we have this zone good, and we have a strong manipulation to go down, retest the zone, the last zone that we have, in which we have the first balance, okay, manipulation, and go down. And this is breaker block. This is the ICT Tartu slope, I suppose, okay. But basically it's ocean market theory, okay. So I was telling you before that the concepts are the same. Is this one, is exactly what I mean before, okay. So this is important to understand, because once you identify a zone, you know that probably the zone will be retested, okay. From my backtest, the retest is at least, to consider a zone retested, is at least of the 50% of the previous range, okay. So if this is the previous zone in which we have a balanced market and we have a manipulation unbalanced, okay, price is going to retest the 50% of the zone. If we test 50% of the zone, we have to consider this zone mitigated. If we don't have a 50% retest of the previous range, this is unmitigated zone. The unmitigated zone is 90% is going to be mitigated, to be retested, maybe in 1 minute, maybe in 1 day, maybe in 1 month, but 90% of the time, this zone will be retested. Okay, this is the first thing that you have to understand. And when you are able to identify correctly the zone, you get everything about narrative. Obviously, market is fractal, so I told you before, if you are a scalper like me and I do this thing on 1 minute time frame, obviously keep in mind that you have to double check the 15-minute time frame or the 12. I know that now, 12, we have a 12-minute time frame that you like most, but it doesn't matter. It's important to have a higher time frame to understand the macro structure, okay? So the long-term bias, because if this is the green line or yellow line is a 15 minutes time frame, obviously you have not to short here, because you know that we have an unmitigated zone inside the higher time frame that probably gets retested. Okay. My strategy, it's very simple. So if this is a zone, okay, on 1 minute time frame, I will looking on a 50-second, for example, time frame. After the first retest in which we create liquidity, okay, and sorry, is not good. This is not good. This. Okay, like this, and then we have this. Okay, so in which we have liquidity and a lower time frame or middle time frame break of structure here. Okay, so here we have middle time frame break of structure, so 1 minute break of structure. Here we have liquidity. Okay, I will look inside here on the trigger time frame. I will look for a candle structure shift. What's a candle structure shift? Is Quasimodo. Okay, is this same story? So previous range, retest on the 50% and trigger the 50%, or you can trigger here just the retest of the previous range. Obviously, if we use it on the seconds time frame, is not really important if you trigger at the 50% or of the retest. Obviously, if you trigger at the retest, so at the top of the previous range, you will have much more trades, but you have higher drawdown. I always weigh 50% or something here, like a gap, a further gap, a liquidity here, okay, or another very good trigger that I will showing you right by now. But this is important. The stop loss always one take below the previous range, and take profit the high, the recent high. Okay, I'm not greed. I mean, I'm not greedy. I don't want to leave profit running because it's very frustrating on the psychological point of view. Because always, a lot of the time, price going to retest, okay, my entry. So I just want to take a good profit, maybe 1 or 1.2 risk to reward. Okay, I don't want to stay for a long time inside the market, but it's my thought. Okay, it's my trading style. If you are inside the right bias and you are going to look at, you're going to check it on a higher time frame, so 15 minutes, 12-minute time frame. If you are inside the right bias, okay, if you trade is in favor of higher time frame, you can leave your profits running. So this is basically the logic behind the strategy. Okay, price tends to retest the recent structure. Okay, if we are in trend. So what I was working, I worked for the last year is try to identify the exact point, okay, or the exact level to trigger the zone. So the exact point inside the zone to trigger, okay. And you can use it, the volume profile tool. You can use the view app. You can use a lot of things, but everything is pretty much clear just looking at the chart. Okay, so we know that we need liquidity. Okay, we know that the liquidity must be created before 50%. Okay, why? Because if the liquidity is created below 50%, we are talking about long position. We know that the zone is going to be mitigated. So once price will get back inside the zone, probably it will refuse the zone. It will go outside the zone, below the zone, and maybe the range that is the low point of the range is the liquidity for another zone, which is this one. Sorry, no, this one. Okay. So how can I identify the exact, well, exact is probably too much, because we cannot know, or I cannot know the exact point in which price will bounce, obviously. But what I like to see inside the zone is, first of all, below, sorry, so this is the liquidity. So below the liquidity, I want to see a fair value gap. Okay, why a fair value gap? What is a fair value gap? Fair value gap is, I told you before, when price is an imbalance. So when price is not balanced, we have a displacement in which big players try to push price away to find another zone in which market will be balanced. Okay, this displacement is because we have a strong buyer pressure. Okay, the buyer's pressure is you can identify it with the fair value gap, with the imbalance. So we know that inside the imbalance we have an unmitigated zone in which we have strong buyer pressure. We have unfilled buyer orders, okay, that needs to be filled before getting higher. Okay, so once No 50% yet retail. No 50% retest yet. So we know that this is an unmitigated zone. We have liquidity. What's the liquidity? What is liquidity? Liquidity is a manipulation inside the zone in which we have a displacement that broke the structure. And this is very important because we have a confirmation that we are on the right side of the market. Okay, because if we have a zone, we have the first up go higher, we get the liquidity. But if we don't have a mid time frame break of structure here and price is moving here, you know, here this on a lower time frame is a bearish trend. Okay, so we have this lower time frame unmitigated supply zone. If we are here, this zone is not valid anymore because we are bullish. Okay, so liquidity 0.3, fair value gap or imbalance. I don't know if it's good, this imbalance with I or unbalanced, to be honest. I never understood this one, but anyway, doesn't matter. So buyers or sellers pressure. Okay, for the trigger, CSS or Quasimodo, same thing. Okay, have you ever heard about quarterly theory? The quarterly theory is basically price retest the 25 or the 75 or the 50, okay, or the previous range of the range that it's guiding the market. And the premium and discount concept tell us that it will be better to wait for the price to go below the 50% of the, not this zone, this range, okay, the last range the price created, just because we have our odds we have the odds in our favor. Okay, the drawdown is so much lower from here instead here. Okay, and the 70%, 75, the 61 of Fibonacci, whatever you want, always, or a lot of the time is inside the zone. And you will recognize, you will find out that the 75 is a lot of the time close or the same level or the 30% of the previous range. Okay, and that's it. This is the only thing you have to understand. But it's really important that you have a displacement here in which you have a fair value gap, because this means pressure. This is the confirmation that you have. You must have to understand that you are on the right side of the market. This is Asian session. This is London session from here. Okay, so let's have a look of just today. Sorry, 1 minute. What's happened in the London session of today? We are 26th of June. So as a lot of the times happen, we have a strong displacement. The first things I do every morning is try to understand where are the Asian session high lows, because one of the probably most used strategy on the London session is try to identify the Asian session high lows and trade the manipulation of the Asian session high lows, okay, to get the other level. So for example, today we get a manipulation of the Asian session high, and probably the target now is Asian session low. It's not a strategy that I use, but it's good. It's good to know, because it often happens, and it helps us to identify the bias. Okay, so this morning we had a strong movement. Okay, so you can use to identify the previous range, to identify the zone. You can use the value high lows from promo card, which highlight the valid highs and the valid lows. But to be honest, once you get trained enough to understand the zone, and I will show you now a special trick to do it, you will not need any indicator. The only indicator that I use is this volume suit by Leviathan, which is very good. Basically, it shows us the volume, which could be relative volume, biasal volume, delta volume, cumulative delta volume, etc., etc., etc. What's really important of this indicator to me is that it shows the pressure. Okay. So green candle, we have buyer's pressure. Red candle, we have selling pressure. And this is truly useful to identify the zone and for the trigger as well. Let me show you an example. Have you ever, I suppose you do, about accumulation, manipulation, distribution? Same old stuff, guys, same old stuff. Accumulation, manipulation, distribution. Okay, so this is the zone that we do have. Sorry for drawings, guys, I know. Okay, or this one, or this one. So we have a manipulation here, distribution. We have a manipulation here, stop first, stop loss, second manipulation, distribution. We have a manipulation here that is not going inside the previous range, so probably is not valid. Another manipulation, and price go down. Okay. One of the best thing to recognize that you can use to recognize a manipulation, listen carefully, is using volume suit by Leviathan. I cannot spell this name. Because look at here. Look this candle. The manipulation is a strong, so the bearish manipulation, for example, consists in a strong bullish displacement to let everything believe that we are going up, and then a huge displacement, okay, on the other side. This is a green candle, this is a red candle. We have, can be wicks, can be everything you want here, but the concept is the same. We have green candle, and after we broke, once we broke the bottom of the candle, the green candle in which we have a manipulation, in which we have a strong, the last bullish displacement, bullish pressure, once we broke it, we go down. We're going to retest the same zone in which we have buyer pressure. We're going to retest it and go down. This schematic is repeating again and again and again and again every day, because this is how they work. Okay. So look at here, for example, we have strong movement to the down. So what we are going to wait is to wait for the price to broke and close above this candle, which not happen anymore. Okay, and price go down. Once we broke here, we go up. Sorry, once we broke here, we retest and we go up. Okay, and here we are in a very premium zone. So after this strong movement, bullish movement, so we are going to think about that probably price market is going to change to go bullish, and this is what happens. Okay, we're here when we have fair value gap. I know it's, you know, a lot of concept. It's a long video probably, I know, sorry about that guys, but it is everything here. Okay, everything I know, everything you need to master the strategy is here. Okay, so what about this morning London session? Look how many trades you can have on this with this strategy. So we have a zone here. No, we don't have a zone. I want to see it to identify a zone. I want to have same thing, accumulation, manipulation, distribution. So I want to see a clear imbalance from one side to re-enter on the other side. Okay, this is the London opening, so I will not consider this, but this is a good zone. No, sorry, no. The low will be this one. Okay, so this is a good zone. Which is this one. Okay, price retest the 50% and go down. Okay, we have a manipulate. Oh, sorry. Thank you. I click on the keyboard. So just look at the manipulation. Where is manipulation? This is a manipulation because we have liquidity here. Okay, so we have the first zone here. Okay, price retested once here. Okay, so this is another liquidity. So we know that price is going to retest the zone and probably make something, make the same pattern here, like this. Okay, so this is another manipulation. So what does it mean? It means that we do have the zone, okay, that is being broken here and is not retested anymore. So we go down. We have a manipulation here on the other side. So this is the first demand zone, okay, that is being broken. Here is retested here. So this is liquidity that we have to keep in mind. Why this is liquidity? Something that I forgot to mention right by now, because here we have a medium time frame or lower time frame break of structure. Okay, so zone, retest the zone and broke the low. So this is a good, very good level to consider. Same old stuff here. Broke the zone, retested, and broke the high. So this is another break of structure here. So this is a good zone to test. And to be honest, I will tell you everything right by now. I will not consider this zone because there is no fair value gap here. Okay. Here we have a fair value gap, which is this one. Okay. And we have the wall zone here in which we have a fair value gap inside the 50%. So usually when we have this huge fair value gap very far from the zone that we have to consider, if we don't have any pattern here like here, okay, like in this example, I will wait for another pattern to get formed here. Okay, but let's go back. We have a manipulation here, so you see liquidity here. Okay, so we get another zone here that's going to be retested here, and we get our fair value gap here. So this is another zone to consider. We go higher, and then finally we get inside the zone. So look at here. Look the importance of this indicator. So we have 1, 2, 3 zone, 3 bullish candle. Okay, in which we have a fair value gap as well. We have, look at this gap. This is something that I try to consider because fair value gap, strong bullish displacement, everything tells me that we are against a huge bullish trend. So before going short, you have to be sure that this bullish trend is going to be, defeated. So here I can go bearish when probably it will be too late. Okay, so the reason by which I not trade this is because we have fair value gap, we have this opening gap here, and we have this strong delta buyer's pressure over there. Okay, price then move down. This is something usual. I will not consider the manipulation that occurs during London or New York opening, like here, because there is something created to get everything fucked up. Okay, so just be careful. Okay, just be careful. I will use this strategy after 15 minutes or 40 or 30 minutes after all the manipulation stuff is ended during the opening session. Okay, I will probably enter here, try to get a scalp here with a stop loss just here and target here in this gap. Probably I will try this because, you know, after this huge bullish pressure, probably the bullish pressure is going to be ended, and when I see the red candle on the retest, probably could be enough for me to enter, to be honest. And this will be a break-even trade anyway. So we go high, we go higher, and then finally, so look at here. This is all liquidity to be taken. Okay, so this is not a zone. We don't have any manipulation. This is not a zone. Where it is? Probably this will be a zone. A good zone to be taken. Okay. Because we have this manipulation here, even if, to be honest, I don't like it so much. And this could be good because we have retest and break of structure in here. So this is the liquidity that we need. Price tap here, but is not going down. is going down here. Probably this could be a good trade. To be honest, I know that we have so many trades during the day. So if there is something that don't impress me much, I mean, I will not enter. Okay, I don't like it the zone because I don't see any institutional manipulation here. This is, for me, is not manipulation, to be honest. Okay, but this is a manipulation, and it goes down. Look at here. Okay, and it go down with this manipulation. So this is a very good zone to look for short trade, but we don't have any breakout structure. Okay, sorry, one thing that I didn't told you is we cannot consider this as a breakout structure. The breakout structure that I want to see is a breakout structure that creates a new high, basically. So, and it's outside the box. Okay, it's a breakout structure that moves price outside the box, so outside the zone. So here, okay, so no manipulation. So then price is moving up with this manipulation here, clear manipulation. Okay, so we keep on going higher. Here price re-enter here in this zone, so we can delete this one. So price broke here, re-enter here. So this is the liquidity point because we have a market structure. Okay, here I move here. Why? Because we have a further gap. This is the unmitigated zone that I want to be taken, not here. Okay, not here, here. Price goes up, and then we have another manipulation here. Okay, price re-enter the zone, breaking this structure. This is not a manipulation, so this is not a zone. No, sorry. So this re-enter here and break the structure here. So this is a good liquidity point. We have a fair value gap here that probably is going to be taken on the 50% that is already being mitigated. So this is not, sorry, this is not good. Yeah, no, it's good, but price already being taken the 50%. So on the zone, so probably the zone is not valid anymore. Go up, and we have, look at this displacement. When you see a lot of green candle going up with this such a big strength, it means that we are in front of the zone. Okay, so price re-enter the zone here, and then broke the structure here. So this is a good liquidity with fair value gap here. Very good, this one, very good. Okay, we have a gap here, we have this, all this imbalance, all this displacement. So lots of strength, bullish strength here. Price is going down. We have another manipulation here. So this is the zone. Okay, we have another breakout structure here. Okay, no trades until now, I know. Okay, I do this on the 15 cycle time frame, but on 1 minute is the same. I will show you the same chart with the same zone on 1 minute. It just because on this time frame is so much clearer. So this is another zone to consider. Then we move down. We have a manipulation here. Grab the liquidity and broke this zone, which is the last low that created the last high. Okay, so what does it mean? Then this is a bearish zone. Oh, fuck. Okay, price re-enter the trade, re-enter the zone, and push the target, push the price away. But here we are in front of the first zone that is being mitigated before. Okay, so this is liquidity. Okay, so we are looking for candlestick structure, candle shift structure. Sorry, candle structure shift. What's a candle structure shift? Simply, the first bullish, the first green candle that broke, that engulfed, that closed above the last bearish candle that create the high, the last low. Okay, so the last low is this one. Where is the high that create this low? Here. When price close above this high, this is a candle structure shift. Okay, it's very simple. So this is, we have equals here. Okay, it doesn't matter. I mean, could be this one, to be honest, or could be this one. Okay, you know, if I usually just when I see it engulf like this, I enter, to be honest. But probably the correct entry is this one. Okay, look at when price. Look at this. When price breaking this low, is going to retest inside this bearish candle, this bearish climax. Okay, re-enter exactly, retest exactly here. Okay, going to the concept that I told you before. Price want to confirm that we are going to leave the zone, that the zone is not the zone that buyers and sellers want to take. Target one tick, sorry, stop loss one tick. And so here, okay, we know that we are at the beginning probably of the bearish trend because we have a zone here. Okay, so probably the target that I will consider is the first imbalance that we have in this displacement that create the zone. The first gap is this one. The first further gap is this one. Okay, this one. Sorry. Oh. Okay, so the target is this one. I will not set 1 to 1 to 1.5. I just focus on where price could possibly react against my trade. Okay, so we can delete this one. First trade, take profit. Okay, price is moving down. We have a manipulation here, so we have another zone here. Okay, this is 1 to 1.67. Okay, price going down. Look at here. Just when you see a strong movement, when you see price clearing the going down, breaking the zone, often price is going to retest the same zone. Okay, immediately. So what does it mean? We have a breaker structure here. So this is a good level to consider. Okay, it's a good level. So don't get fooled. Oh, sorry. We forgot to mention this liquidity. So, you know, this is a momentum strategy. Okay, basically. So when price is reaching a previous range a previous momentum level like this one, okay, we know that we are on bearish trend. So why we have to look for a counter trend trade? We can do that, but what we have to do, and this is another rule that I will give you guys, be very careful. When we have a lot of structure that is going to be untested, so the price could test again, okay, and we turn the trend, okay, so we move against the first zone that we have to highlight before, okay, we have identified before. We know that price is going to retest the zones, okay, the unmitigated zone, and we know we have this one. This no is already been taken because price going down, is going up, mitigate the zone, the 50%, okay. We have those zones here. So if we know that, if we have zones left behind, why we have to take a counter trend trade? Just align with the main trend. And you know, basically I lost a lot of money trying to take this counter trend trade, and because I didn't want to align with the main trend. Just be patient, wait. We have 10-15 trades per day with the strategy. If you use 15 seconds time frame, well, maybe 10-15 is too much, but we have 5, 6, 7 every day. Okay, so don't worry, it will take your time, it will give you market, it will always give you the chance to do it. Okay, anyway, we have first touch here. So this, we can delete this one, okay. We can delete this one because we don't have any trigger here. Price then move down and try to react on this zone here. Look what's happened here. I mean, oh sorry, first of all I have to adjust this this zone. So the first fair value gap that we do have is this one, but look at here, we have missed fair value gap here, okay. So on this trade I will be very careful, also because we have an unmitigated zone over there, okay. Anyway, let's go back. Price react to the zone, not to our recent level, and made 1, 2, okay, one chalk change of character here, okay, and to break a structure. No, sorry, the choice is this one. So we have this one, okay. Before taking our liquidity level, so we are on a bearish trend, as I told you before, but it's good enough. It's another confirmation that we need to go with counter trend trade. If we broke recent structure like this, if market shows us a strong displacement like this one, okay, before our level, this become another liquidity level, okay. So right by now this is something very interesting, because we have this displacement, we have not against a strong falling knife, okay. So when price is touching our level, if it will give us our Quasimodo pattern like here, yeah, we can go, okay. Stop loss, one tick on the time frame or one tick below, and this is the target, 1.36. It's enough. this strategy have a strong, very high win rate, win profit rate. Okay, so don't look at the risk to reward ratio. Okay, so we are here, we're going up, and then we take this level. Okay, we take this level, we are not inside 50%, so I know that this is risky, but this is the high, which is the bearish candle. The bullish candle that created this high is this one. So I just want to wait for the price to close below this level, and there is no closure. Oh, okay, there is no closure. If this candle is closing here, we'll enter on the retest of this bullish candle here. Okay, price is moving higher, 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 higher. To be honest, I will try here. Okay, I tell you because it's the first loss of the day. It's a trade that I did, and you know, I broke the rule. I broke the rule. Why I broke the rule? The entry was, I mean, the putter was correct. Okay, I just enter here. We stop loss here, but you know, we have 1, 2, 3 red, 3 green candles, so we have a strong bullish trend, a strong bullish power. What I have to wait is for the price to break this candle. In fact, price is going down. It's going down and maybe retest. No. Okay, after we broke this strong level, that's the reason why I tell you that the volume shoot by this guy is very useful. Okay, because it helps you in terms of visualization, to identify correctly the level from which we can assume that we're going to be inside the bullish or bearish trend. So first stop loss of the day here. Price is moving up. We don't have any manipulation here. Probably this one. Probably this one. Yeah, this is good. Okay, price re-enter here. We have a fair value gap. This is perfect. This is what I want to see. Simply. Okay. And then it moves up. Where? Here. Okay, on the 50%. You know, I didn't identify the zone because I didn't do on the real time today. So I draw the box exactly how I did by myself today. The truth is that when you see this kind of thing, so a wick inside box in which is close to 50%, and we have this strong displacement, okay, and we have a fair value gap here, okay, it means that probably this is a level of another box inside the box, okay, which is not visible probably on this time frame. So if we go down, we can do it. If we go down on the 5 second, we have our box, and that's why this is a new level, because we broke the recent structure here. Okay, further gap, same old story. Okay, so no. Okay. Okay, we are here. So, which is the last bullish candle that create the high? Is this one. Okay. Probably I will consider any short trade from here once price broke this green candle here. Sorry. Okay. So, if you are quick enough, you can enter here, but with higher risk, because you have to be careful on the drawdown here. I will always wait a retest of this gap, okay, of this level, which probably which is something that is going to happen in the future. But this is not a trade, so I didn't take this trade. So another manipulation here. Okay, this is how you have to draw the zones. Okay, we have market structure, we have breakout structure here, so this is a good level to trade, to consider this one. Okay, I will highlight the zone because we have a fair value gap here. Okay, so what does it mean? It means that when we have a market structure here, okay, stop loss just one tick, and this is the target. Okay, 4.3. Beautiful. But no manipulation, and we go down. Why we go down? Because I told you before, the target is this one, because we have this two unmitigated zone here. Okay, in fact, price just took it right by now. Okay, so just finish this session. Zone, manipulation here, and then we have a zone here. Price grab the liquidity here, create liquidity here, and we miss the trade, but this is still a valid zone. Okay, and so on, guys, and so on. Then we have manipulation here, so we have a zone here. Okay, we're in this level, we have a manipulation here, so this is the zone. That price re-enter here, fair value gap, price grab the fair value gap, grab the liquidity, Quasimodo, stop loss just one tick above, and take profit. Okay, so here we don't have any take profit, any gap, sorry, so the target will be the bottom. Okay, probably this will be a break-even trade for me. I usually, and probably this is my mistake, I usually try to move as soon as possible the stop loss on the break-even, just because I can't, how can I say, I don't want to have a higher drawdown. I try to get my drawdown as less as possible. This means lots of break-even trades, but anyway, it doesn't matter. Okay, so then we have first manipulation here. Okay, so this is the zone that is going to be tested and violated. So now this is a new zone, bearish, but we don't have any breakout structure until here, and finally we reach our zone on the beginning of the created the beginning of the session. Obviously, this could be good for us to take here, for example here. Well, I don't like it because, you know, for the same reason I told you before, I want to see a bullish change of character, right? Or just a strong bullish participation, okay, bullish pressure. And this is not enough. This is not enough, to be honest, because, you know, I want to see price closing above this candle, which is the last displacement, bearish displacement that we do have. Okay, same old story here. I want to see price closing here. Okay, so this liquidity level could be good for scalping. Probably yes, but it is a little bit risky. This will be so much better, to be honest, because, you know, even if we don't have any closure here, we have an implied fair value gap here, an inversion fair value gap here. So probably half size here you can risk. Okay, you can enter here with half size, but, you know, probably is a break-even trade. Just stick to the plan with the main trend. Okay. Last thing, look what the market is doing right by now, and look how this indicator is very, very powerful. So why would you have this candle? Okay, so let's go on 1 minute time frame. Okay, look at where we are now. Okay, we grab the liquidity of the opening range. Okay, here. Okay, we have this strong bearish candle. So when you see this strong bearish candle at 20,000, so at psychological level. Anyway, I want to see price moving down strongly. Okay, when I see this powerful, this strength, I want to see price going down here. Okay, why I didn't see that? Why with this strong bearish strength, price is not moving down, like here, for example? Okay, here, for the simple reason that we are in front of a manipulation. Okay, if we are on a manipulation phase, probably it doesn't mean the price now is going to retest and go higher, but I'm pretty much sure that something is going to happen here. Okay, and probably we do have a second manipulation if this doesn't work. Okay, but we have the first signal that sellers are not so powerful. Okay, the second manipulation could take place here on the Asian session low, which is a psychological level that every day price tends to test. Okay, so guys, it's a very long video, I know. I hope you you listen to everything. I hope you understand everything. You can obviously listen to this video twice, third, or in 2 parts, whatever you want. Join my Discord group, it's free. You have everything. You have bias, you have my trade, you have a lot of free stuff. You have journal backtest. Okay, everything. You have the Notion template with the strategy. Yeah, it's all for free. Hope you appreciate this. Okay, that's pretty much it. Thank you very much, guys. Let me know what you think about using the comment section below. Okay, see you. Bye bye.